Welcome back to CopyTrader. So this week on Twitter, I saw an interesting tweet by someone, and in that tweet, the question was asked, what's wrong with buying stocks that are going up? And I thought about it for a few seconds and I thought, this is an interesting tweet. And that tweet is going to guide me in stock picks for this week. But before that, I'm going to go through price action. And I'm going to start again with Bitcoin, which has changed a little bit from last week. So from this chart, that uptrend we've been in is still in play. This is that uptrend. But on the short term, Bitcoin has corrected. And now it seems to have found a bottom here. And it seems to be bouncing off that bottom. So long term, it's still an uptrend, but short term, price has bounced off 10,130, and it's now moving back into the cloud. So I kept mentioning this level in the previous weeks because this level is where this consolidation, this whole consolidation of price here, that's where it took place, and that consolidation formed a channel, and the top of the channel was 10,134 or 130, and the bottom of that channel is 8,561. So price has bounced off that support, which is below the cloud, and now it's making its way back into the cloud. So overall, I can't read much into this, and the reason for that is what I'm seeing here is this whole region here is like another channel. It's not a very good channel because of all this space in between. But until price takes out this high here, Bitcoin is not continuing the uptrend. So once this high is taken out, then this uptrend is back in motion. But as long as that high is not taken out, then Bitcoin is just in a range. So it's very possible, the way I'm saying this, that Bitcoin will come back down to retest this level and then bounce back up and then make its way up. That's just speculation. I don't know if it's going to happen or not. Anyway, that's all for Bitcoin. The next one is gold. Gold has been very interesting because it hasn't really done much since last week. There is this consolidation that has formed a symmetrical triangle. Now that triangle is completely filled, which means what's next for gold is a breakout. And from what the Fed chairman said on Thursday, rates will remain at zero till 2023. That could be bullish for gold. That could be very bullish for gold. So if that turns out to be a bullish tailwind for gold, then we could see a breakout here out of this symmetrical triangle. If that doesn't happen, if it breaks down, then the levels I'm watching are, and this is spot gold, 1804. That's this level here below the Ichimoku cloud. If that doesn't hold, next level 1751. If that does not hold, which I seriously doubt, because that level is the top of this range for gold consolidation here. So if this level doesn't hold, then price goes down to 1680. That's like a worst case scenario. It's very likely one of these levels will hold. So next week, I'm watching out for this pattern here breaking out. So this is the prevailing trend. It's an uptrend, and then consolidation into a symmetrical triangle, what is most likely to happen is a continuation of the trend, just this breakout to the upside. But you never know what's going to happen. So that's all for gold. Next is the S&P. So S&P 500. There's not much to really analyze here. From this high, this all-time high, price has entered a correction and it has broken below this level, the first level at 3,400. So that has broken. We're still hanging around that level. We're breaking it, then we're going above it and coming back down. But overall, that level has broken. The next level is 32.15. So price is not there yet, but it's making its way there. So once we get there, if that level does not hold, I suspect it's going to hold. If it doesn't hold, next level is 3,000 or 3,011. This should hold. If this doesn't hold, then there's something really serious going on. So all I'm doing now is I'm watching for price to come down to 32. This is not price, by the way, it's an index. 32.15. That's what I'm waiting for. That's all I'm waiting for. Just get down to 32.15 so I can start buying. If it now breaks below that level, I wonder if I'll have enough cash left to buy here, because it's very tempting to spend all the cash buying stocks here. Okay, so that's price action done. Now I want to look at market breadth. I'm going to start with the advanced decline line. Now this advanced decline line is very straightforward, just like price action. This is the SPY, and I'm going to turn on my my pen. I have a new pen I'm going to be using. I'm going to use red color. Yeah. Okay, so this is price. That's the high, and then price has formed a low here. But if you look closely, this is the low. Price has broken that low to form a lower low. I think I should switch this to black. Right. I'm going to use black color. Yeah, black is good. So this is the swing low here. Price has broken below that low, has formed a lower low. Now, this is interesting for many reasons. I'm going to trace this all the way down, see if I can do a good job of this. Not so straight, but not too bad. So this is the cumulative advanced decline line for the New York Stock Exchange, common stock only. And you can see this is that high here correlating to this high in the SPY. So we have formed a low here, a lower high here, but the AD line has not formed a lower low. So stocks in the New York Stock Exchange are still holding up. So what I will be, if this is going to be a continuation of the downtrend next week, that is if the correction continues next week, what I want to see is, I want to see this AD line break below this level. Then I know, okay, the correction is continuing. I need to watch my levels. That is, I want to see price going down to somewhere here, 32.15. Now, moving on to the NASDAQ AD line, it's almost the same story. This is the high, which corresponds to this price point in the SPY. This is the new low formed by the AD line, and the AD line has not broken this low. So I need to see the 80 line break below this, like that, come down, then I know, okay, this correction is going to go on much further. If that doesn't happen, then it means maybe we're getting to the end of the correction. Now this is the S&P 500. Large cap stocks are doing not too bad. It's the mega cap stocks, Apple, Google, Facebook, Microsoft. Those are the ones that are suffering in this correction. But if you look at this 80 line, it shows that the rest of the index is not doing too badly. As a matter of fact, this is a high here. The 80 line formed a higher high, and then it formed an equal low here. See, it doesn't break below this low. It does slightly, but not too much. And then it formed a lower high, but that 80 line needs to form a lower low, which I doubt it's going to do. I don't think that's going to happen. So next week, I want to see these 80 lines for the New York Stock Exchange, NASDAQ, large caps forming lower lows, for me to now see this correction continuing much further. That's what I need to see. Mid caps are not doing too well compared to large caps. Mid caps formed a lower low here, and mid caps are about to form a lower low. That'll probably happen next week if the correction continues. Small caps formed a lower low here, but they did so well this week. Yeah, small caps were doing fine this week. So next week I want to see a lower low for this correction to continue. That will make me hold off on buying. So that's looking at the cumulative advanced decline line. Now I want to take another look at breadth using the percentage above the moving averages. If I use that, I see something interesting here. I want to draw two parallels. I want to look at this. Let me bring back my pen. I'm going to use red this time around. So what I want to look at is this region here. So this was back in June. Price from the high here, and then there was a correction down to this level. The amount of drawdown in June is very similar to the amount of drawdown that the index has made in September. So this is the high, this is the low. Almost similar, very identical. But if I look at the percentage of stocks that were above the 200-day moving average in June, this is for the New York Stock Exchange. It was about, I would say, somewhere around 50%, somewhere here. When this pullback took place, that percentage dropped down to as low as somewhere around 30. There were 30% of stocks above the 200-day moving average. Now compare that to September. The same amount of drawdown, but stocks have hardly moved. We still have 53% of stocks in the New York Stock Exchange above their 200-day moving average. So that's a very stark contrast to what happened in June. So stocks are still, they're doing fine despite this correction. They're not collapsing like they did in June, which is a very good sign. What that simply means is what I've been saying for the past weeks. It's just the mega cap stocks. Tesla, Apple, Microsoft, Google, Facebook, Netflix, all those large cap stocks. They are the ones that are actually taking part in this correction. If I move down to the NASDAQ, this was June. During the correction, percentage of stocks above the 200-day moving average fell from around 55 down to, I would say, 40%. This time around in September, it's been flat, almost the same. The decline is very, very little. Large cap, from 70%, that percentage fell down to 40%. In September, it almost looks like it's actually advancing. It's increasing, almost, but it's not. So this is the resultant line. So about 60% of stocks in the large cap S&P 500 are still above their 200-day moving average. Mid caps and small caps are not doing too well. You can see there's a decline here, but look at this compared to June, 70% down to around 35%. Small caps from 60 down to 30. This time around, just a small decline. So what that is telling me is, once the mega caps finish their correction, the stock market will resume the uptrend. That's what I am saying from here, from Market Breath. Okay, that's all for Market Breath. Now I want to go back to that tweet I was talking about. What's wrong with buying stocks that are going up? There's absolutely nothing wrong with buying stocks that are going up. Although to a value investor, it means they are not cheap, especially if these stocks are making new all-time highs or new 52-week highs. It means they're not cheap. So a value investor is looking for stocks that are cheap. I want to find stocks that are making new highs, and if they're all-time highs, the better. So what I'm going to do for stock picks is, first of all, I want to find stocks outside the US. And the reason for that is because if I compare the stock market, excluding the US, that's VEU, with the US large caps, this is what I see. There is a clear long-term trend of outperformance of the US stock market, but since September, international stocks have been outperforming the US stock market. So this correction we're witnessing is a US stock market correction. That means there are stocks in other markets that are doing very well. I want to find those stocks. So what I'm going to do is I'm going to use about 5 lines of code. I want to search for stocks in the London Stock Exchange that are doing very well. Stocks that are making new 52-week highs. By the way, the FTSE 100 is looking terrible at the moment. UK 100, let me pull that up. This is the FTSE 100. It looks far worse than the S&P 500. So this was the bottom in March, and then there was a recovery. It formed this swing high, and ever since then it's formed a low, and then a lower high and a lower low, another lower high, another lower low. Now it's formed a lower high again, and it looks like it's going to form a lower low again. So overall, the index is not doing so well, but it's not experiencing the correction that is taking place in the US. Despite the fact that this chart is not looking good, I can still find some pretty nice stocks here. So this is my code. Type is equal to stock, and I'm going to disable this because I want to search for stocks in the London Stock Exchange. So exchange is LSE, and I'm not looking for ETFs, so group is not ETF. I want to find stocks that have high daily volumes, at least 400,000 shares per day being traded. And I'm not just looking for stocks that are making new highs. I'm looking for stocks that have formed high after high after high. So I want Friday's close to be greater than Thursday's close, and Thursday's close to be greater than Wednesday's close, and Wednesday's close to be greater than Tuesday's close. And I want it to be making a new 52-week high. So that's my code. The codes that have this double slash have been disabled, so they will not be activated. So I'm going to check the syntax, make sure there are no errors there. Yep, my syntax is correct. So I'm going to run my scan and I get 5 results. Thor Mining. Yeah, that sounds like a mining company. Ocado Group, yeah, supermarket, I know that. BGS, Bailey Gifford Shin Nippon. That sounds Japanese. Admiral Group and Experian. Okay, what I'm going to do now is I'm going to examine these charts. First of all, let me check to make sure these stocks are on eToro. We'll start with THR. All right, it's not on eToro. This is the most annoying thing about trading on eToro. You won't find all the stocks you need. Ocado is on eToro, I know that for sure. BGS, not on eToro. Admiral Group, I think it's on eToro. ADM, there it is, Admiral Group. And Experian, I'm pretty sure that's on eToro. XPN, yeah, it is on eToro. So I have 3 stocks. So I'm going to examine their price action. Start with, I'm going to disable this, OCDO. Now look at this chart. This is what I'm talking about. What a beautiful chart. I'm going to zoom into the monthly. Look at this. I love this. IPO, it was flat and then straight up. Beautiful chart. Anyway, this is a nice, beautiful chart. So what it looks like to me is there was an uptrend here and then price began to consolidate here, forming a channel that's between 2250 and 1908. There was a brief period, well, not a brief period. This is about from May till August. That's about 3 months of consolidation. And then it broke out of that and then pulled back, retested the support, and then continuation of the uptrend. And look at this. Friday's candle, that's 3%. Thursday's candle, 2%. Wednesday, 1%. Tuesday, 10%, gap up. So this is amazing. There is definitely high momentum in this stock. It gaps up here and then bang, bang, bang. 3 white soldiers. I think that's a candlestick pattern. Or 3 white soldiers. I love this stock, but I think it's already leaving me behind. So breakout, confirmation, and 2 days of uptrend. I might be late to jump in. Let me check the other ones. ADM, Admiral Group. Okay, the monthly trend is nice. It goes up, comes down, and then uptrend. I like that. Back to the daily. So what do I see here? I see an uptrend. I see some consolidation here, formula channel. Okay, I like this one. Why? Because price consolidated into a channel between August and September and tests resistance, pulls back, bounces off support, and gets back to resistance, and it breaks out on Thursday, continuation on Friday. So I love this. This is just ready for me to buy into it. I like this. I like this. That's perfect. ADM. I'm gonna buy ADM. ADM. Admiral Group. This is my virtual account. It's not real money. So buy into ADM. $500. What's wrong with buying stocks that are going up? There's nothing wrong, especially if you buy those stocks just on breakout. Ocado has already broken out. It has continued the uptrend for 2 days. Admiral Group is just breaking out. Just breaking out. So this is a good one. Next one is Experian. EXPN. Experian. So yes, there is a period of consolidation here. Oh, Experian has broken out. Confirmed. It's just like Ocado. Yeah, I think this one is leaving me behind. So I think for this week, I'll just stick with Admiral Group. So Admiral Group is my stock pick for the week. There's absolutely nothing wrong with buying stocks that are making new highs, stocks that are going up. So that's all for this week. I'll see you next week.